What's going on, everybody? It's your boy C-Zar, and in this video, I'd like to go over the general market outlook. I'd like to talk about the crypto market as a whole, and also set the record straight on some various things that I think people are getting wrong or might just be confused on with this recent drop. We're going to go over various dynamics and some hot topics in the space as well. I'm going to give my input on that. What value is that to you? I don't know. I've been in crypto since 2015. This is my third bull market. I have a little bit of experience in the markets right now, and I've seen this kind of stuff happen before. Trust me when I tell you, these flash crashes happen every cycle, multiple times a cycle. And every time it's the same result, every single time. So we're going to go over that now. I know the market is really polarized, saying that we're about to rip to new all-time highs, or it's the bear market, we're about to move down. Nobody's right in that aspect. This polarization is completely wrong, and it's fogging our perception of reality. I want to set the record straight, and if you let me, we're going to do that exactly in this video. So hit the like button, subscribe, and let's get into it, okay? First and foremost, what I want to talk about, and what I've had some immense difficulty doing, is putting myself in the position, in the mentality of these traders who just got reamed on the 10th of October, right? In case you were sleeping under a rock, let me inform you, $20 billion in leveraged positions were liquidated on this day. It was the largest liquidation event in history, okay? And a lot of people, talking about setting the record straight, a lot of people are assuming or trying to say that this was comparable to COVID. It was not comparable to COVID. COVID was way worse. The COVID drop was way, way worse. August 5th, 2024, that drop was worse than what we saw yesterday. Do you remember August 5th, 2024? Nobody remembers. Of course not. It was a bigger drop for Bitcoin than it was this day. It might not have been as big of a drop for altcoins, but this was not that big of a drop. It was a big liquidation event. So what does that mean? That means right now there are a bunch of leveraged traders who have not learned their lessons and they're desperate. You would think that with every single leverage trader in the space getting reamed in a 1 hour period, you would think it was literally in a 1 hour period that most of these liquidations happened. You would think that they would all learn their lessons. They'd be under a rock somewhere crying to sleep, but no, that's not what's happening. What's happening now, and I'm speaking from personal experience from my first cycle, what's happening now is they're desperate. In my first market, my first bull market and bear market, I hit zero 4 times. I started off with my life savings at the time. I was living with my mom, and I was, I was a bit younger, right? This was like 10 years ago, and I was living with my mom, and I wasted all my money, man. All my money was gone. And then once I hit zero, I went and I scooped up my change jar, scooped up anything else I could find. I sold my Xbox games, whatever, picked up an extra job, picked up odd jobs, trying to make as much money as I can to put into the markets before the next big move came. Zero, 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 hitting zero like 4 times in that bull to bear market between 2017 or 2015 really to 2018. It was bad. It was really bad. And in my experience hitting zero, I learned a couple of things. So I'm trying to share that with you now, right? And if you're one of these people who recently got liquidated, you might need to hear this the most. But I think anybody will benefit from this information generally. This will help you understand what's going to happen over the coming days and weeks, okay? The first thing that somebody feels whenever they're liquidated is they feel despair. You feel like you get punched in the gut. You feel depressed, almost like you're mourning something because you've got a serious loss. Let's be fair, right? So there's a lot of people that feel that. But then after a day, maybe after an hour for some of us who rebound quickly, after about a day or two, you get you put your pants on, you shake off the sadness, the pity party, and you're like, you know what? I can do it. I can make it back. I messed up. I was in a bad position. I didn't have any stop losses. I'm going to come back. I'm going to hit it even harder this time with more leverage. I'm going to scrape together my money and I'm going to put it in there. Because here's the deal. Most people who were liquidated, you actually don't get liquidated to zero. Let's say you start with $1,000. When you get liquidated, you're left with like $200 to $400, right? You're left maybe even $500. It depends, right? The exchanges don't typically leave you with zero. At least these decentralized exchanges don't. You're left with something. So that something that you have, these traders in their heads right now, these sad traders, now they're desperate. Now they're desperate to take that something that they have. They might even be pulling money from other places that they shouldn't be pulling money from, borrowing money that they shouldn't be borrowing, selling things that they shouldn't be selling, picking up a job, and then putting that money into leverage trading, which they shouldn't be doing. They're desperate to make all that money back. If I just go long now, then whenever it comes back up here, if I go 40x long right now, I'll make back a good bit of that money, if not all that money. And then whenever it goes up, I'll have even more money. It'll all be okay. By the time it goes up, I'll be fine if I just do it now. It's acts of desperation. And in these acts of desperation, both to the long side and the short side, You have people who are not thinking coherently. Okay. You think that right after a move like this, that now we're just going to move all the way up to new all-time highs. It's going to be that simple. No. Right? I'd go back over here. I think back to this moment over here where most of the market was bearish. I was even bearish, actually, right here. We flipped bullish, I think, like literally on this day at like $109,000 we flipped bullish all the way up. There was a mass amount of shorts that got liquidated. We had a massive short squeeze here, you guys. And the same kind of thing happened here, right? Traders got liquidated. It was dynamic. There was this desperation in the air. So what happened amidst that desperation? The market makers had a field day. The market makers had an easy time playing on everyone's emotions, right? This was kind of a hard, and not looking back at it, it was a really easy moment. All you had to do was short at this line, long at this line, and you would have killed it. You would have literally killed it every single time, right? With the exception of maybe this time or this time here, right? But like you go long and you go short of that area, you would have killed it. But everybody in that moment, because they just got their shorts reamed, they just got the shorts just got creamed, and squeezed is actually the right word to use there. They're trying to make their money back before the next rally happened. So then we did that. We ranged sideways, and really it's this kind of price action that messes with people the most. Looking back at it, it's the easiest to trade, but the reason why it messes with people the most is every time we're up here, it's new all-time highs. We're going to new all-time highs. How many times did I think, and we all think that we were going to new all-time highs every single time we saw the price there? And then I didn't think we were going below 100K, but everybody started shouting, we're going below 100K. We're going to fill the CME gap at $92,000. We're going below 100K every single time that we went to those lows, right? We're going to give it all back. The cycle's over. It was a very polarized atmosphere. Does that sound familiar? Because we have that going on now. We have a very polarized atmosphere right now. Now there's half the crowd is saying, oh, the bull market's over. We're done. That random call that the 6th of October would be the bull market high was accurate, right? No, that's not it. So everyone else is saying we just flushed out all the weak hands, all the leverage positions. Now we're going to rally. No, that's not what's going to happen either. What's going to happen is very similar to what happened back here. We're going to be range bound, and maybe we're range bound in this exact range between 110K to 115K. Maybe we move up a little bit first, and then we're range bound up here, but we're going to be range bound. Maybe we come back down or we're range bound down here. I don't know. This could be a broader range than what we saw back here. If it was like this, that's definitely a wider range than what we had back here. It could be tighter. It could be a little bit tighter, but we're probably going to be range bound every time we move up, getting people to max long the tops, the relative highs, and then we'll move down just enough to clear them out, to liquidate them if they're using like 40x leverage or these insane leverage positions, which they're going to be using because they're desperate now. And again, I only know that they're desperate because I'm just speaking from past experience, right? I didn't leverage trade this recent drop to the upside or to the downside. I haven't leverage traded in a little while because sometimes it's just good to take a break. And that's kind of the message I'd like to deliver to some people right now. If you're leverage trading, if you're desperate, if anyone out there leverage trading or not feels desperate in these markets right now, just literally breathe, man. Calm. Feel some calmness because you probably feel a lot of unrest in your heart right now. You probably feel very desperate. And anybody who's desperate, I'm speaking to all desperate people right now trading in the markets, just stop. Just stop. Go away for a week. Just go away for a week. Reset for a week. Don't look at the charts. Don't invest in crypto. If you have a paycheck coming in, don't put it in crypto. Just wait for a week. Not financial advice, not a financial advisor. More of like spiritual advice right there, because or more like emotional advice right there. Take care of yourself, okay? A lot of people assume that this is my one chance. This is my one chance, and if I mess it up, I'm never going to get a chance again. That's where that desperation comes from. You got to do it right now. This is your chance. You've been working all these years. This is the bull market. It's about to happen. You're going to mess it up. This is blah, blah, blah. Who cares? Calm down. It's not your one chance. There will be another chance tomorrow, and the next day, and the next day. And after next month comes by, there's going to be another chance. And after next year goes by, there's going to be another chance. After next decade goes by, there are opportunities in abundance in this world, my friends, okay? In this world, there are abundant opportunities where you can make so much money. And in crypto, it can be easy. There's a various amount of coins that are probably going to do a 20x or more by the end of the cycle. I think the average altcoin is going to do phenomenal. In that sense, all you have to do is just buy and hold and wait. But there are coins or stocks that offer even less returns that you can make life-changing money with, or job opportunities or other things that if you just time things right, any losses that you're experiencing right now that cause this desperation, this unsettling in your heart, it's momentary. It's short term. Don't let this prevent you from seeing clearly that in the future there is an abundance of opportunities for all of us. Okay, so don't feel desperate here. Okay, not financial advice, not a financial advisor. I'm assuming that nobody learned their lesson Because over the past 30 days, we still have 15 billion in shorts and 10 billion in longs. Over the past 24 hours, we have $3 billion in shorts, $3 billion in longs. This tells me very clearly, nobody learned their lesson. I'm assuming that all of a sudden now we don't have a brand new class of leverage traders. So the fact that there's more leverage now in a 24-hour period than I've seen in a long time on both sides tells me that we've got a bunch of desperate traders. Desperate traders who, if memory serves me correctly in my own experience, who will be not sleeping, who will be trading every moment they can, who will be watching the charts and every kind of thing that they can like a dog 24/7. And they're just not in the right state of mind, right? And again, if that's you, just take a break, man. Take a break. Just don't do it, okay? With that being said, in moments like this, market makers are aware of this stuff, right? AI trading bots, they're aware of this kind of stuff, man. They have the easiest time manipulating you. Because every time you see the price here, you're thinking, we're about to go to new all-time highs. This move's going to get given back. It just came down this fast. We're going to come up this fast. No. We're going to come down. We're going to shake out a lot of these long positions that just got piled on. We're not going to make it easy for you. It would be too easy. It's not easy. Nothing's easy. It's not going to be an easy time for anybody. You think it's as simple as going long here or long here and then all that's going to be given back and everything's forgiven? No. It's never that easy. You think it's that simple? Hell no. It's not that simple at all. Before we saw any kind of new high over here, after reaming the shorts, we had to dip down first, clear out some longs before we moved higher. We just cleared out a bunch of longs. Don't get me wrong. We cleared out a lot of longs. Longest liquidation, the largest liquidation event in history. But if you think you can go long here and everything will be forgiven, you're lying to yourself. You're desperate. You're delusional. And it's okay. I'm not insulting you. I'm just telling you what's true. I've been there. I know. Okay? It's like an addict looking at another addict telling you, dude, you're addicted. You got a problem. And nobody else would tell you because they didn't know. But you can see right through them. I can see right through you. So what we're going to do is we're going to range. We're going to do something that, again, in hindsight seems so simple. Just short here, just long here. It's that simple. But it's not because, again, at every single moment that we were up here, we thought, oh, my God, we're going to new all-time highs. Every single time we went down here, the market was loud with, it's the bear market. We're going into, we're going to see prices below 100K, you know, stuff like that. It's going to be the same thing here. Every time we come down to 110K, we're going below 100K. Every time we're at 115, prepare for new all-time highs. We're very polarized. And what happened by the end of this? Leverage trades went away. We sure as hell did not have, on a 30-day basis, $15 billion in shorts and $10 billion in longs. It wasn't that dramatic. There were a lot more longs than shorts here, so we did go down. And then by here, there were no longs at all. There was like less than $1 billion in longs, so then we went up. There's like $20 billion in shorts, something like that, okay? Does that sound familiar? It's the same thing, but just to the opposite effect over here. We're probably going to range bound ourselves. We're going to get rid of every single long trader who's going long here or who went long here, who thinks that it's as simple as just going long and then they'll make money. We'll clear them out. And then every short trader who thinks, oh, it's just going to continue. They think it's as simple as that. We're going to clear them out too because they're going to go short at the bottom, long at the top. We're going to keep moving sideways until there's no more leverage left in the game. And then we'll finally move up higher. I very much believe that Bitcoin and the rest of the markets are going to be moving up higher, but I don't think that right now is a good time for anybody to be leverage trading. Not financial advice, not a financial advisor. Moving on from that thought, a whole other thought here is that people are desperate, or it's an extension of the same thought that people are desperate, and in that desperation, they make the wrong decisions, right? You start thinking of different avenues of how to protect yourself or change things, right? The reality of this move is nobody saw it coming. Maybe we should have seen it coming because there were $20 billion in longs piled on. Maybe we should have seen it coming. But nobody really saw it coming except for the people who coordinated it, maybe, which it definitely was a coordinated event. A lot of people try now to make desperate acts in the form of not leverage trading, but in the form of chasing pumps. Okay, I want to talk about Zcash and Zora right now specifically, because Zcash and Zora were the only two coins that were actually moving up on that day, the 10th. They were Zora was up like 10%, 9% that day. Zcash closed 11% that day. They're the only two coins that moved up that day. So a lot of you probably got this bright idea, or maybe some of you got this bright idea where my altcoin's down, these ones are up, I should sell my coin that's down 15, 20, 50%. I should sell that coin and buy this coin that's up like 100% this week. That's the coin. That's what I should do, right? Sell low, buy high. That's what they say, right? That's a bad way of doing business, guys. It's a very bad way of doing business. And let me tell you again, because I've done this exact same thing in my last two bull markets even. Not this bull market. I refuse to make these mistakes again. Refuse. You literally refuse to do it. Once you learn it, man, it's a choice at that point. You might not really have a choice if you have no experience. You're just kind of succumbing to your emotions. You don't really know what you're doing, so it's not really a choice. But whenever you know what you're doing, it's a choice, and you have the right choice to make. The right choice right now is to just make your bed and lay in it, right? A lot of people think that, oh my God, my coin's down here. It's moved down a lot. Zora and Zcash have moved up a lot. Maybe if I just sell this coin for this coin, I'll be okay. These are clearly the better bets. And if it comes down, whatever, it's fine. But guess what? It is going to come down because that's what happens. Coins, every cycle I've been in, whenever we've seen these flash crashes happen, there's always a couple coins, a handful of products that do not seem affected by the market. And then so everyone gets it in their right mind. At least I did. I would buy these projects, these shiny objects in the sky, and then I would sell my coins that dropped because the rest of the market dropped. These coins were the safe havens, whatever they were at the time. I buy those, and then because they just pumped, they correct. And because the coins that just dumped, they correct. So now you sell the coin at the low for the coin at the high. The coin at the high comes down and the coin at the low comes up, and you literally double down on your losses. So don't do that either, right? Don't get the bright idea and start chasing shiny objects like Zcash or Zora. They just moved up a tremendous amount. Zora on the 30th of September to where it is now is up 123%. It saw a move up overall. Why can't I move my mouse? Okay, here we go. Moved up overall 200%. Zcash in that same amount of time from the 30th of September to where it is now is up 300% with an overall move of 357% and even more overall, right? In that very short amount of time, both these coins moved up while the rest of the market moved down, okay? While the rest of the market had a massive crash. I want to play a game with you right now. I want you to play a game with yourself even, okay? Let's think. Let's pretend we're all smart investors, okay? Let's all pretend right now that we had some courageous foresight and we bought Zora at less than a penny at $0.008. Let's pretend we bought Zcash at $37, all of us. If Zcash was here right now, which it is, and Zora was here right now, which it is, would you be tempted with the money you put in to put more money into Zora and Zcash right now as the savvy smart investor that you are? Or would you be tempted to take some profits from these coins and put them into, I don't know, anything that's on a discount right now? Any and all coins that literally last like 3 days ago dropped 19% in one day. They're all down substantially from the relative highs, right? The average altcoin right now from the highs of this month of October, technically right now, the average altcoin's down 15%. Would you rather buy more of these coins, or would you rather sell some and take profits and put it into the other altcoins? I think it's pretty obvious, right? If you were a savvy investor, a smart investor, you'd probably not add to the coins that are doing well right now and sacrifice your coins that are doing bad. You'd probably sell some of the coins that are doing good right now and rotate those funds into things that have sold off, because that's what money does. It rotates, okay? So don't get the wrong idea and start buying coins that have pumped, right? Again, at this point in the market, we're going to see a lot of desperation. Nobody learned their lesson. Nobody learned the lesson. No, now they're going to try harder to make it all back. They're going to try harder than they did before. They're desperate. So with that, we're going to be range bound. We're going to be moving sideways. There's going to be various pops and various dumps that happen, and it's all just a psyop. The best thing you could do is buy your crypto, the one that you've done research on, the one that you've done analysis on, the one that if somebody talked to you at a cafe or at a restaurant or down the street, you're just walking down the street, you had a random conversation, you could tell them almost anything about it. You know the fundamentals in and out like the back of your hand. Hold that coin. Don't sell it. Don't sell it for the shiny object that you don't know, that you never heard of or never gave thought to until it started to pump. Don't do that. You've been doing research for months, for years, and you're going to soil that all because of one day that crashed and then a couple coins that pumped. Don't do that. Stick to your guns, right? Unless you have some fundamental something that's fatally wrong fundamentally with your coin and you're aware of it. There's no development going on. Something's wrong, right? But as long as there's development, as long as they're building, as long as they're staying active, then it's fine, right? Price is arbitrary. It's going to come up in a matter of no time at all, right? Fundamentals will only get stronger, and that will boost the bags, right? The worst thing you can do right now is take all the time, all the effort that you've put in over the months and over the years, all the preparation you've had, and soil it now because of one quick liquidation event. That's all it was, right? And every time we get a liquidation event like this, this is the second one this cycle that I can think of already. We've probably had more than two, but this is the second one that was like a flash crash liquidation event this cycle. we move sideways. We move sideways. We range. We're boring for a little bit, and then we move up. Maybe a week, maybe 2 weeks, maybe 2 months. It's Q4. It's October. It's probably not going to be 2 months. We're probably just going to range for a little bit. We're going to be moving up here pretty damn soon. But I just hope that everybody's on the right side of the lines. Moving on from that thought, I hope I drilled that thought home. There's this here that I want to talk about as well. I feel like this is a good extension of this. Crypto whale opens new $163 million Bitcoin short after $192 million win. You got to imagine that he probably lost that other $30 million already, is probably what happened. Or maybe he took some profits. I don't know. A lot of people in their acts of desperation, they start to follow people. They start to think, oh my God, I have to follow this guy. That's what it is. If I just do what he's doing or she's doing, then I'll be safe. Don't do that. Just because this guy opened up a short, or girl opened up a short at the low here, okay? He's only added to it, right? That's all it's at. They've added to it. Let me see. This opens new short. No, this because they did a short at the low, literally at the low, and they added to it. So since they've shorted them, the price has only gone up, okay? But they have so much money. If they short, and let's see. Is it that much money? Are they shorting everything? They're straight degens then if they're shorting everything. If they short properly, they'll do little bits and layer up as it comes up if that happens. But the 10x leverage bet is already up 3.5 million. When was this made? October 13th today at 12:59 a.m. Oh, okay, so earlier today. So definitely not. Again, this was made early today. This was made like before. This is probably at the low points of the day. Now he's in the red, right? Don't follow these articles. Don't think that now, every single time that there's a drop, every single time that we have an insider wallet, a new trader, a new wallet opens up and they trade, and they make the right trade on the right side of the coin before this massive news event happens, people follow them. And every single time they get the insider trade right, and then the trades that correspond later, it's like 50-50. Sometimes they're right, sometimes they're wrong. They're only human beings, okay? You get this one insider moment that doesn't make you God, but everybody starts following you like you are. And I'm just saying that if you're watching this video, don't pay attention to this. In fact, whenever you see messages like this about that insider wallet that definitely knew what was going on in this coordinated event before Trump made the announcement he went short, I don't know what the story is there. I'm assuming that it was somebody from the Eastern Hemisphere who knew what was going on ahead of time. Who went short personally. People theorize that it was someone in the Trump family. Maybe it was. I don't know. I'm not going to weigh in on that. But whoever it was, and I have my reasons for believing. I think it was someone in China, actually. But I have reasons for that. But I don't want to go into that now. I don't think it's worth. I don't have enough information to go into that. But I'm very confident that it was. Anyways, it doesn't matter. It doesn't matter who it was. It doesn't matter who they are, what they know, whatever. Stop following them. Just stop paying attention. It doesn't matter. It's not going to help you. It's not going to help you. It's a nice media piece, but it's not going to help you. Okay. Moving on. Speaking of media pieces, Citibank is to launch crypto custody services in 2026, which is huge. Citi's huge, you guys. That's crazy. They're going to allow crypto custody in 2026. You guys, we are halfway through October, the first month of Q4. Crypto's bullish. Absolutely bullish. Did you guys know Morgan Stanley? I keep doing this. I keep pulling this up on every single one. Morgan Stanley just allowed, which they, by the way, they used to make they would fire their employees for talking about crypto or trading crypto. Now they're allowing for, let's see, where is it? They're allowing for their own crypto investors to start investing. Their high wealth individuals, clients, to invest in crypto. Now, as of now, they're allowing that, right? Citibank's going to start allowing crypto custody in 2026. There's all kinds of bullish things going on in the markets right now, you guys. We are only fundamentally better today than we ever have been. We're just at a discount. Altcoins, crypto as a whole, we're only fundamentally more solid today than we ever have been. And I want to point on that note, I want to point out this drop, right? Because this is the others chart. The average altcoin on this day from a high to a low dropped 50%. And you hear a lot of people say, I think this shows the real underlying weakness of the markets. This shows how easy to topple these crypto markets are. It wasn't easy. It wasn't easy, okay? You had Coinbase, Binance, Kraken. I don't know about Robinhood. Maybe Robinhood. I don't know. You had Bybit. Every top exchange in the world at the same time went down. There's nobody to buy. There's nobody. I had a plethora. We were going live right in the midst of this drop. I had a plethora of people telling me they were trying to buy. They were trying to buy here. The crypto markets are not fragile. If if the markets, if the exchanges were open and working and people could place buy orders, the prices would have never gotten this low. The only reason they went this low is because the exchanges were down. And the only reason the exchanges were down were probably not because of technical difficulties, but probably so they could liquidate all of their clients. That's what it was. It was so that they could liquidate you. That's why it was such a massive wick. That's why it was so short-lived and why we came back up immediately. Because the markets are actually very stable right now. The markets have been boring. The markets are very stable and very strong. You guys remember, anybody and everybody who saw the price down here, go back and watch my most recent live stream. Tell me I'm wrong. Everybody was trying to buy here. I was. I before I started making the live stream, right? But Coinbase was down. A lot of people were trying to buy, and then I went live, and I'm like, maybe I should buy some more, but I didn't. I didn't make any moves. I just kind of let it all play out. I really didn't make any moves at all between this. But a lot of people I know and people in the live stream were talking about trying to buy here. Wasn't happening. It wasn't happening. I'm sure we're not the only ones, man. I'm sure there are a bunch of people across the board. The markets are not flimsy. But any market, if you shut off the valve, you shut off the volume for anybody to buy or uphold it, and then the exchanges are the only ones that control the markets at that point, yeah, they're going to dump the markets down low. But what's the benefit of that? Nobody's going to sell, right? Except for the people who have stop losses, except for the people that have long orders that get liquidated, except for the people who are in positions of vulnerability. Nobody's going to sell. So that's what they did. They cleared out a bunch of liquid positions. That's why the price actually moved down like that, right? It's not because the market is weak. Anybody out there saying, this shows how vulnerable the crypto market is, no, it's not vulnerable. This shows how vulnerable you are if you're leverage trading, if you have stop losses. That's how vulnerable you are. That's what it is. This, if anything, showed how strong the crypto market was because of how quickly it rebounded, right? If these exchanges were open and eligible, the prices would not have gone that low. That's why they shut them down. Because they needed them to go that low. They need the price to go that low. They had to shut it down because if they didn't, they wouldn't have cleared out all these positions. That's why. That's why. It's plain as day. Citibank, big deal. That's going to add to the fundamental strength of crypto as well. Strategy, this is crazy. And I'm not pointing this out as a laugh at Michael Saylor. All right, we love Michael Saylor. I think he kind of reminds me of like a hamster. Strategy bought 27, it's the teeth, I think, $27 million in Bitcoin at 123. Michael Saylor, by the way, is a badass, you guys. I really do. I know that a lot of the talks that he gives are like the same thing, but he really is, he's got foresight, man. He's got the gift of foresight. He really does. He's a very smart human being. But anyways, enough buttering the bread. Strategy bought $27 million in Bitcoin at 123K before the crypto crash. And Saylor's like this. You guys got to know that Michael Saylor doesn't care. He would do it again. He would do it again. And we're talking about this specific article because everybody makes mistakes. Even the top dogs, even the person that's in control of the company that has the most Bitcoin in one single custodial compartment, strategy, even they buy at improper times. He bought it at 123K. He put in $27 million. He bought a lot of Bitcoin right before the drop. Okay? Even the big dogs do it. It's okay. But guess what? Guess what's different about this guy than the people who lost money on the 10th? He wasn't leverage trading for one, and for two, I guess kind of, right? Kind of. It's kind of leveraged to a certain degree, to be fair. But he wasn't leverage trading. And number two, and the most important thing really is that he didn't sell. He didn't panic sell, right? He probably wishes that he could have only bought more. That's it. That's it, right? There's nothing wrong with buying the top. I guarantee you Michael Saylor does not feel bad about buying the top. He's probably proud of it. He said it himself. He'll be buying the top forever. That's something that's going to happen, okay? So I'm pointing out this article really not as a slam piece against Michael or a ha-ha, right? Try to make myself feel better while the market's down piece. No, it's because it happens to all of us. It happens to the best of us. It really does. And last but not least, crypto news. Crypto funds see $3.2 billion in inflows despite the flash crash. That's what I'm talking about. What weakness? What weakness in the markets? There's clearly a desire beyond everything. Bitcoin ETFs lead with $2.7 billion as trading volume hits a record $53 billion. You guys, there's no weakness in the markets at all. No weakness at all. This drop was orchestrated. All the exchanges went down at the same time. That's the only way that it could happen, because if the exchanges were open, It wouldn't have gone down that low. People would have bought it. The prices would have gone up. It wouldn't have been as dramatic. The markets are not weak. So that's my closing point. In essence, this video is just me saying, don't be a desperate degen. And if you are, take a break, go touch grass, take a cold bath. And the last part is, we all make mistakes, man. It's okay. It doesn't matter. But the market's not weak. The market's not weak. It's robust. There's an abundance of opportunities. You just have to wait and be patient and let it come to you and then execute when it happens. Don't just let it come to you and then let it go. Execute, right? You've been in the markets long enough. You start to see things happen that have happened before. Be on the right side of the ball the next time it happens, okay? I got nothing else for you guys. Hit the like button, subscribe. Thank you all for being here. I'll see you on the next one, okay? Take care of yourselves. Bye-bye.